In this video, we will learn about the concept of insurance gap. What is insurance gap? Insurance gap is a country metric which, as the name suggests, is the difference between the optimal insurance cover that a family ought to have based on their income, their expenses, the family size, the age of the members, and the actual insurance cover that exists to cover for these emergencies or these unexpected events. Now, what is the optimal insurance coverage? It's the right amount of insurance coverage that ensures that all exigencies or eventualities can be consumed in the insurance cover that you have. While the actual insurance coverage, as the name suggests, is the actual insurance that the insurer has bought for themselves and their families. Look at it this way. When you and I buy insurance for our lives, for our families, we take into account our current income and our current expenses, which at that time seems to be the right thing to do. However, what we don't realize is that there will be an insurance gap that will creep in the future. Now, that could be because of several reasons. People often forget to take into account that there are outstanding loans of the insurer. People disregard the importance of significantly increasing inflation that eats into the money every year. They do not fully understand how their rising standard of living is going to impact both their expenses and their ability to save for the future. And then there are several really big one-time events. There could be children's education, there could be their marriage, there could be buying a house or any such big purchase, and of course, the eventuality of retirement for the partner and yourself. All of this could lead to a big insurance gap and unfortunately a high financial instability circumstance. My question is, why would you do that to yourself, my friend? Why would you act in a manner that makes it seem like you're irresponsible? Here is some jaw-dropping data on India. For every 100 rupees that is needed in life insurance for the country, we only have life insurance to the tune of 17 rupees. That's a whopping 83% gap for the country. 1 in 4 Indians do not have health insurance at all. And 72% of Indians do not have an emergency fund. All of these facts are truth. And they're hard-hitting when you get to read them, hear them, see them, and find yourself in that spot. So it begs the question, why is there such a huge gap when we look at the country, how much it has progressed ever since we got independence, and how we are on our way to become a developed country and yet suffer from these metrics? And here's why. People don't consider life insurance as a useful investment. The purpose of making this video is very simple. It's to make you aware, which you already are by the way, but to remind you starkly that your life is not unimportant and it should not be devoid of life insurance. This is proper financial planning and you ought not to disregard it, irrespective of the stage you are in life or the age that you are at. If you're the bread earner of the family, you have aging parents, you have children and a spouse to support, and you have loans on your head, or you certainly want to ensure that there is safety and protection for your family and yourself for the future, then become smart with your life choices. The best time to buy life insurance was yesterday. The next best time is today. Life is unfortunately uncertain. However, you have the choice and the power to make your family's finances certain, even if that uncertainty occurs. I encourage you to get the right amount of life insurance cover for you and your family today.